How to make sense of stock market news. When you hear a news anchor on TV talking about stock market new developments, they usually include terms such as the Dow Jones, the Nasdaq, or the FTSE in their report. What do these phrases and abbreviations mean then? These terms refer to stock markets or stock exchanges where a company is listed. A company must be listed on a stock exchange for its shares to be traded publicly. After a company's shares are released to the public in an initial public offering or IPO, they are then available for the general public to be traded at the stock market. The New York Stock Exchange is probably the biggest stock market in the US, while the FTSE holds the honour for Europe in London. When people ask, how is the stock market doing? What are the latest developments? They mean to ask how the stock market index is performing. Stock market indexes are the key indicators to the performance of any stock market. A stock market index, at its simplest, is the cumulative stock prices of the companies trading divided by the number of stocks traded to achieve an average indicator of stock market performance. Examples of popular US stock market indexes are the Dow Jones Industrial Average, the Nasdaq Composite, and the S&P 500. The Dow Jones lists the stocks of 30 companies ranging from food giant McDonald's to bankers like Citigroup to entertainment firms like Disney. The Nasdaq Composite tracks 5,000 companies from different sectors, but is mainly focused on the technology stocks. The S&P 500 measures the stock of 500 of the largest public companies. They are categorized as the largest according to their market value. The S&P 500 is actually considered a pretty solid indicator of overall stock market performance since they cover companies from a broad base of sectors. Indexes form the basis of the stock market. New investors are often advised to invest in these blue chip stocks that are traded on either the above three stock exchanges because they offer great stability and the chance of regular dividend income over time. Some of the most popular international stock market indices include the FTSE in Britain, the Nikkei in Japan, the Hang Seng in Hong Kong, the DAX in Germany, the CAC in France, and the ASX in Australia. Because stock market indexes give a great snapshot of the stock market, they are used as indicators to gauge stock market performance. Beginner investors that only invest in an individual stock. They can also invest in mutual funds, which are representative stocks of a certain stock market index. Mutual funds are marginally safer investments because they group together stocks that perform roughly the same way and are professionally managed. From this video, you should now have a better understanding of the stock market, new insight into the workings of stock market indexes, and an informed take on issues facing beginner investors. This knowledge will help you make sense of the financial terminology heard every day on TV and read in newspapers so that you can become a savvy investor.